F.A.C.E experience. And coming up is our headline act, Ben Maldonado. At Ben Maldonado, who forecasted everything we're seeing on our screens a couple years ago, and people thought he needed to be stabilized. Welcome back to F.A.C.E, Ben.
Hey, Dale, how are you?
Good, buddy. So,
a lot of energy in the room today.
Yeah, because it's not a webinar anymore; it's a show. So we've even though it's infotainment now, right. So you're part of it. You're the headliner. We were the opener, and really been seriously. Some of the things that you were talking about on your analog in the 70s, and what was going to happen with commodity prices and rates and energy, and it really, you really had a lot of foresight to where we're at right now. So looking forward to seeing, if steroids are, continue to be the medicine for commodity markets here.
Yeah, I mean, first of all, thanks for the kudos. I appreciate that. I was going back, as I was preparing for today, looking at our previous talks and when we started, and it was actually 3 years ago in May that we started talking about, this correlation with the 70s and what was coming up, and the stagflation and everything. And it seemed crazy at the time, but
yeah, no one was looking back as the 70s then.
No,
it was all stock market mania.
Yeah, and part of what I try and do is I frame things, from the biggest picture, and then sort of distill it down from there and say, okay, where are the opportunities? Where is something not priced in? Where's there mispricing? And is there an opportunity from a risk reward standpoint? So, as you can see, here's what we're going to review today. I always start with the major cycles, because those are the background weather, and they sort of frame human perceptions and human behavior. And so it's really important, even though, others may have heard this or seen it, I try to give new insight and information about it, because I think it's really important that you get that huge big picture framework right, because then everything else sort of falls in place from there.
You see a light at the end of the tunnel, or only?
Yeah, I think it's a train right now.
Okay, go ahead.
We have it's probably going to be a tough couple of years ahead of us, and we'll talk about why. But we're going to cover the major cycles. The Epoch cycle is the big 400-year cycle that's ending. We're in the terminal phases of that last couple of years, and the ramifications of that are major. And then, of course, there's the 70s analog that we've been talking about for 3 years now, and it's really evident now to people. And so we've got to really see, based on that, where's it going, what's the end game, and how do we position ourselves there. We'll do a quick review of the 2022 themes that we talked about in early February, see where we are on those. Take a look at the background frequency for the rest of 2022. What's the environment that we're operating in? Can it give us clues as to where we look and where the opportunities are? I talked about this last time, and I'm bringing it up again because I think it is one of the major themes that we're going to be stuck with and have to deal with for the next 2-3 years, and that's the issues of the energy crisis. And then now that we're sort of officially, semi-officially have reached the bear market territory with the dip below 3850. What's the strategy for investing when you got an inflationary bear market? I mean, I think that one of the most important things is you can't do the same things you did in the bull market, because they're not going to work. So we'll talk about that as well.
Okay, take it away.
All right, let's start off with the Epoch cycle. As I said, this is the big 400-year cycle that's coming to an end. Its major characteristics was the development of these large and centralized institutions that organized society, gave it structure, and gave it support. But what's happening now is that's, as the cycle ends, that's breaking down, and it's breaking down to set the stage for what's coming next. people are talking about, and I've heard you talk about the Great Reset. What is it? What does it mean? In my opinion, this is what the real Great Reset is. We're seeing a sort of dissolution of these old systems, one by one, destruction and demolition of them. And the question is what's going to replace them, and how's it going to look, and what does that mean for where to put your money, and how to protect your money, and how to grow your money. Where we are now is we're in the fragmentation phase, and every single week, every single day, we're seeing this loss of trust and faith in these institutions that we used to depend upon. And we'll go over a quick list of those. One of the key things, and this is kind of a new piece of information. It's the ending of the era of control where control was centralized. And the irony is that the powers that be are trying to increase that control and have more power centralized and more control at the top. And it kind of fits with, at the end of the cycle, the dominant organism or the dominant entity wants to maintain that power. They don't want to give it up, so they double down.
Who wins? I've heard people describe our country, even though a lot of people believe we still have the same country, as a scientific dictatorship, in the way that tracking and controlling and vaccines and possibly a coin. Do you think that they let the crypto experiment go on so that people would be willing to embrace U.S. government digital coin that will, completely eliminate privacy forever?
I think they're going to let that, because exactly what you said, they want to centralize that control. They'll kill the cryptos, take control of it. But remember, anything that's centralized now or managed by a few or really, really large top-down control is going to fail.
That's great. That's great news.
I think it's great news too. It's going to fail.
There's probably a lot of chaos in the transition.
It's going to be chaos. There's going to be pain. There's going to be a lot of suffering, because they are not going to let go of power easy. But remember, we're moving to a more individual, sort of tribal, small little organizations structure that's going to replace this big structure. I don't know exactly how it's going to look, but it's not going to be centralized control. So anything based on centralized control is going to fail.
Is that the end of the IRS?
Potentially, because
more good news. Okay.
I mean, look at all these examples of things where we've had trouble, right? Where these organizations were strong and they were depended on and they were pillars, and they organized our society. But the ones I have in question mark are sort of the last ones that have come up. Fiat, it's still a question of whether fiat's going to survive. Probably not. Globalization, I mean, that is a key factor. We're going to go into that in the presentation. Globalization is dead.
Over.
It's over. That game is over. The Supreme Court now, with this leak, the Supreme Court's in trouble. It's on, it used to be the one institution that nobody questioned. Not the case anymore.
The LME too has a lot of history for it to have gone through that fiasco of
150, 200 years of history, right?
Yeah.
And it's gone. Their credibility is gone.
Yeah.
They changed the rules after the fact to benefit the insiders. They're done.
Yeah.
So I mean, you can see it. And if you have this understanding of the epoch cycle in your mind, you begin to become aware of all these things in your daily news, in your Twitter feed, and the things you see. You can see how the credibility and the trust that used to be there for these institutions is dissipating, and rapidly. So that's what the epoch cycle is about. Our 70s analog and the connection that we have now is incredibly strong, and it keeps getting stronger as events unfold and we see how things are playing out. The first connection that I made was with Nixon and Trump. And you can see the list there of all the different things that happened under Nixon's presidency. Same sort of things happened, just a little different twist, but very similar themes that happened under Trump. They were both Republicans, both disliked, strongly on a personal basis. So the connections there are fantastic. Unfortunately, right now we're going through this connection, which is the connection of Jimmy Carter and Joe Biden.
Can you go back to your previous slide, Ben? Because
Sure.
you could make an edit on your previous slide now that it lines up. I know when you first did it, we had that, it was during COVID and the oil price went negative, but actually it's the same as the 70s.
Absolutely.
The oil price quadrupled. So
yep,
it's just exactly the same.
I agree 100%. Oil prices.
So you could change. That's your assignment.
For the next time we change it.
Yeah. Okay. That's it. I'm just your editor, man.
I appreciate that.
All right.
So what we're experiencing now and why I think there's still a lot of people who don't understand the pain that's coming is the same type of economic malaise and inflation that we suffered in the 70s is coming back again. The ones that I added have the different type of check mark here. We've got energy crisis 2. It's unfolding. This next one is really interesting, Dale. I thought you'd be interested in it. In 1970, Pierre Trudeau invoked emergency powers in Canada to handle rebellion in Quebec. In 2022, his son, Justin Trudeau, did the same thing with the truckers. I mean, what's the chances of that happening if there's not a connection cycle-wise?
Yeah, really.
The big one that affects us all that are traders and are trying to make money and save money and do all kinds of things with money. The Fed is massively behind the curve now, just like they were in the 1970s.
That was Arthur Burns back then. One of our attendees, Richard Sabo, is asking, are you the guest who predicted in February 22 something big was going to happen in March?
Yes.
And what was that?
I didn't know. I just said the cycles are calling for something very big. What I would say would be the war. The war started February 24th.
Okay. All right. So there you go. He did not know then.
Yeah, I didn't know exactly what it was going to be, but I just knew the cycles were.
That was pretty big.
The probabilities favored something.
Probably the biggest geo event since World War II.
Right. The last one, of course, is the commodity boom. Everyone's aware of it now. I still think it's got more to run, maybe 2 to 3 years left, and we'll talk about why. 2022 themes that February 3rd we talked about last time I talked with Dale. Yeah. Limitations and shortages. This is the most important thing, I think, if you take anything from this talk. This theme of limitations and shortages is going to be with us for another 2 to 3 years. So anybody that thinks the problems with supply of anything or everything is going away anytime soon, it's not going to happen. And we'll talk about one of the things you got to understand is, it's not a straight line. Nothing moves in a straight line. The market moves in phases. But this limitations and shortages is going to be present. So what does that mean? Look at things where there are going to be limitations and shortages, and you're going to see higher prices. Commodities obviously fill that bill. So that's one of the reasons why I've been bullish on commodities, and I remain bullish on commodities and anything where a limitation or a shortage could hit. The myth of eternal growth gets shattered. This is coming. I don't think it's happened yet. Everyone still believes, the economy is going to grow. The negative GDP was a 1 quarter thing, or even if it's 2 quarters, everything's strong and everything's good. This ties in.
Do you believe we're already in a recession, Ben?
I do. I think
when do you think it started?
Probably when the stimmies ran out, when everybody, when everybody had already, blown their stimulus wad. So maybe 4th quarter last year.
Yeah.
Maybe 1st quarter this year. I don't know about, the exact timing.
Okay.
But this myth of eternal growth being shattered, I think, is coming as this deglobalization or reverse, globalization happens, because a lot of what globalization did was it masked over the fact that, growth is scarce and not really happening. It created a false sense of growth, and that's gone. Volatility was one of the themes I talked about. Obviously, we've had that. Power, might, and violence. Well, we have essentially World War III started so far in 2022. It hasn't expanded outside of the Ukraine yet. Unfortunately, I think that's probably coming. Second half themes. Let's talk about these real quick. One of the things everybody has to understand is that in the particular cycle that we're in has a pulsing nature to it. What that means is it has a strong effect and then it wanes. Then it has a strong effect and then it wanes. Think of like a strobe light, right? Not moving that fast, but like a strobe light. So
how about a black light?
That's going to, that's a good 70s connection. That's going to confuse a lot of people.
With my lava lamp, man.
Right. The pulsing nature of the cycle is going to confuse a lot of people to think, it's over, right? Yeah. The recession's over, or the slow growth's over, or inflation's over. It's not going to happen. I'll show you examples why. We're going to see decreasing economic activity. I think we're already seeing that, and it's going to continue in terms of the deceleration in economic activity. The rise of nationalism, or as I'm calling it, reverse globalization. There's examples of countries that have stopped exporting certain things. Russia, it's fertilizer. China, it's these rare earth metals and other things that they feel are important. India has announced they're going to stop exporting some sugar, steel, iron ore. Today I saw something about, they were talking about rice.
Yeah, India is not exporting wheat.
Right.
Everyone's going to hold on to what they have.
Right.
The only wheat from Ukraine is in Russian trucks going back to Russia.
I mean, even the U.S. I saw is considering stopping gas exports to the EU, because everybody's going to start worrying about themselves now.
Yeah, great nat gas call too, Ben.
Yeah, we'll go over that. That was really good. Nat gas is.
I just wanted to give you a heads up. I know I've probably interrupted too much. We have about 10.
Sure, we'll go fast. Okay, so buddy. This nationalism and reverse globalization has major ramifications for growth.
Hey, Ben.
Hey,
Dale, you can easily take another 10.
Yeah, we have.
You can easily take another 10 after that. So you have 20.
Okay.
Thank you, Steve.
And you know what? Problem. You can take the next hour. I'm going to skip the morning edge. So go ahead, Ben. Just kidding.
All right, let's stick with the nationalism theme. I think watch for signs of it. Understand that it has negative effects for growth. Okay. Food security. We've talked about this off and on for the last couple of years. Unfortunately, that's really coming into the picture now. It's going to also feed into this nationalism and this reverse globalization as people say, you know what, we're not exporting food, we're hanging on to it.
Yeah.
And this last one, again, I don't know what it's going to be, but later this year, there's a crisis, and the theme coming out of that is hopelessness.
Depression.
So I don't know. I have no idea.
I mean, that is the definition of depression is, anger turned inward, but basically hopelessness.
So we'll see. We'll see what that means. Yeah. I'm just the messenger. All right, let's talk about the pulsing and some examples that we can show you to so you have an understanding of what to look for and what to see and how not to get fooled. Here's the monthly CPI from 1970 to 1980. I put boxes around sort of highs and then lows in different years, and you can see the trend. We had, a high of 6.2% in 1 month in January 1970, then a low of 2.7 in 72. So people here were probably saying, inflation's done. Yeah. We're good. No worries.
Great point.
The next peak is December of 74. It hits at 12.3%. Make a higher high, right? Then in 76, it comes back. We're back under 5%. Everyone's like, it's under control. No worries. We don't have to worry about inflation. That's a higher low. And then the peak is in March of 1980 at 14.8% monthly CPI.
Welcome, Paul Volcker.
Exactly. So don't fall for this whole thing that we've seen the peak, because, and this next chart is courtesy of one of my followers, Justin Perino. So I want to give him credit for that. I've been saying on Twitter, I've been throwing out peak is the new transitory. You're going to hear everybody talking about peak inflation and trying to spread this notion of the worst is behind us. I don't believe that's true. I think the cycles don't favor it with the shortages and limitations, and I don't think the macro environment favors it. This is a chart, as I said, Justin Perino put it together, showing the inflation going back, over 100 years, and how it's like almost, Dale, it's your 3 drives to a top pattern.
Yeah. And it surpasses the 70s. I'm sure a lot of people weren't aware that we had huge inflation when I was 4 years old in 1918.
Right.
I mean, They don't talk about that. Everyone thinks about, 100 years ago, they think about the Great Depression, but looks like they had extreme inflation prior to that.
Yes.
That was the roaring 20s, right?
That's right. I mean, listen, the key thing here, guys, is remember, this ties in with that pulsing aspect of the cycle, right?
Yeah.
Strong backs off. Strong.
So you got to buy
off.
this pullback in metals and grains and everything that's happening here. This is just a respite and a correction of a wave that hasn't even broken out yet.
That is the thesis, right?
Okay.
That's the thesis that I'm operating on, is that you use pullbacks in the commodities to add to those positions. Right. Yeah. You don't chase the ones that have flown and that are starting to correct. Look at the ones that have been correcting, find good risk reward points, get in. And
so people could use the analogy of rotation in stocks from different sectors to rotation in commodity markets between energy and ags and
that's right,
base metals and energy, different energy parts of the market, like natural gas made a huge move with crude moving sideways. So it's almost like you have to know your sector and know where to rotate.
And trade them. Be a trader, right? Find your spots and trade them. We talked about reducing economic activity. And again, this is another look at what happened in the 70s. We had 3 recessions in the 70s. Could that happen again? Absolutely. And again, economic activity is going to be reduced and it's going to be uneven. So don't fall for the 1 month changes or the 1 quarter changes or things like that. Know what the big trend is. And the big trend is with this reverse globalization, you're going to see, and more nationalism, you're going to see slower real growth. You're going to see higher inflation. So stay focused on the bigger picture. Here's a sort of a chart I think that can capture this reverse globalization that we're going to see. Look when the first peak was, early 1900s into the Great Depression. We're seeing something similar unfold here, I believe. And it's again, in self-interest, people are going to start doing this. This is the scary one about hunger, because hunger definitely equals violence and panic, and you're seeing it in Sri Lanka. I don't think in the United States or maybe even in Europe we're going to see the same kind of issues that the third world is going to see, but it's real, and it's going to be something.
Most people don't understand that because they've never experienced it, but on a smaller level, I think most people, I get agitated when I'm hungry.
Yeah.
Okay, so you can imagine, and that's, being able to have access to food. Can only imagine what it's like.
Yeah, I don't know how many times in my I don't know how many times in my life I said, geez, I'm starving. Well,
yeah. Oh yeah, right.
People are going to really experience that. And that's
really a tragedy.
Craziness.
Okay. Craziness. So the people that complain about high prices should be grateful, because there's a difference between paying ridiculous prices and
Oh,
still
so much,
being
yeah.
able to get it and not being able to get it.
That's right. That's the difference.
Yeah.
So major theme that we have to talk about, because I think this is going to be one of the things we're going to see next 2 to 3 years minimum, which is the continuing energy crisis. I'm calling it energy crisis 2 after the one we had in the 70s. Because of, and it's a lot of it is self-inflicted, which is really the tragedy in my opinion, with these ESG policies and these just wrong-headed, right intended but wrong-headed direction that they have us going in, which is, yes, we want to take care of the environment, but you cannot, stop the supply of something you need until you have something to replace it with. And what we're running into is we're going to have peak supply before peak demand. The mandates are preventing companies, they're refusing to make these investments because, they know there's going to be social ramifications as well as financial ramifications for them if they do. And it's resulting in a glaring lack of supply coming to meet the world's energy needs. More capacity, 1.4 million barrels per day of oil refining capacity is going to be closed in the next few years. We're already short, and margins are at the widest they've ever been in history. So they're making more money than they've ever made, but they're not investing. And that's usually what helps to sort of reverse prices and bring commodity prices down, is that the producers, overinvest at the top because they're making so much money and they want to keep making money, and they increase supply too much and it overtakes demand. Well, that's not happening. And that's the scary part for where these prices can go. Here's an example, higher oil prices usually have the rig count will track them and follow them. And you can see, going back to 2010, there was a perfectly good relationship there. We're not seeing it anymore. The rig count's just not responding. Producers are not investing in supply. What does that lead to? It leads to higher prices. You basically have almost had a triple in diesel prices since the beginning of the year. And it may get worse on gas prices. Again, because the supply is not there and producers are not investing in supply. So what does that mean for us? How can we take advantage of this? Crude oil is one way. It's bullish. I think it's got higher to go. Every time, I watched crude every day. Every time it gets sold down, people step in to buy it. There is a bid under crude. The supply demand characteristics, as well as this sort of limitations and shortages theme that we're seeing, I think applies to crude oil as well as the commodities we'll cover today. Find spots to buy crude with good risk reward ratios, trade it when it gets into resistance. This is a bull market. Dale was talking about natural gas. Natural gas is another one. Supply demand issues favor higher prices. The supply side is not getting invested in. I like natural gas. We've gone from, I think I identified this about a year ago. We talked about it like in the mid threes. It's hit I think it's over 9 today, almost 9.20 today. It looks higher. Again, you want to find a good risk reward spot to get in. If you're not in, you don't chase things, you don't buy up on spikes, but the big picture is very, very bullish for natural gas. We talked a little bit about this in the beginning when we were going over the agenda. What's your strategy for a bear market, and an inflationary bear market at that? If you're using the same strategies you were using last year when we had a bull market in equities, you are going to get killed. The key thing is you have to change your strategy. Here's some suggestions for what you can do to protect yourself and potentially grow your assets in a bear market like we're facing. Number one is hold higher levels of cash. In a bull market, you want to be fully invested. In a bear market, you want cash. Why do you want cash? Because the goal is at the end of the day to have a bunch of cash when we get to the bear market lows and everything's on sale so you can buy them. And then as we switch into a bull market, that's when you do the buy and hold, and you hodl and all these other bullshit things people were saying when the turn came. But that's what you do, and it works in a bull market, which is why everyone thinks they're a genius and they try the same thing in a bear market and get killed. You got to sell the rips. In a bull market, you buy the dips. In a bear market, you find resistance points. You sell spikes, and you trade the spikes down. You got to trade less frequency and with smaller size. When volatility goes up, which is what happens in bear markets, you must size down because you're going to get shaken out of the trades otherwise. And of course, as we've been talking about for a couple of years now, you buy real assets, which include commodities, real estate, collectibles, anything that is a tangible asset that'll increase in value with inflation. Here's a little something that's interesting just to give people a perspective on time, because I keep seeing everyone wants to think it's going to be like the COVID bear market that lasted 6 weeks or 4 weeks or however long it was. It was incredibly short. That's not the reality when you have a bear market. If you want to see where we are time-wise, we're about 5-6 months in.
Yeah. And
look at these other bears, how long they last: 15 months, 35 months, 65 months, 30 months. I mean, you got to, and I'm going to go over some dates, that I feel are going to be important out in the future, but you got to figure we're going to be 2 to 3 years, maybe more given the bubble we had. But right now, the thesis I'm operating on is about 2.5 years based on the cycles. Here's a little chart I found that I thought was quite useful, showing the lengths and the drawdowns in bear markets. The average bear market was about almost one and a third years, with a cumulative loss of about 41%. We're what, 5 months into this, 6 months into this, maybe, depending on where you start, which high you take. So we got some time to run, and definitely price to run. So keep that in mind. Right now, in terms of bear market timing, these are some of the dates I'm looking at and focusing on for significant lows, if you will. The first major interim low I think we're going to have is in January of 2023, which will give us a potential multi-month rally from there. The penultimate low is in August 2023. And I know, Dale, I think you've had a few guests that have had that similar date in July, August 2023, which is kind of interesting.
The last one was
Francis, I think, right?
From the spiral calendar.
Chris Caroline had it too.
Yeah.
Something around there. I think they're
a lot of you,
July.
A lot of you bicyclists are looking for that.
Yeah. And then the low, I think, is actually May of 2024, where we can.
Maybe it'll be on my birthday.
Maybe. So, I mean, this is
subject
to change.
The market at 95 years old.
The most important thing, though, you gotta keep this in mind, is that if the Fed pivots and they say they're not going to fight inflation and they're going to drop bombs of liquidity on the market, forget about all these dates, forget about the whole bear thing. You got to buy. I mean, it's a painful lesson that I've paid a lot of tuition, but I learned over the year is you do not fight those guys.
Is the dollar peaking here?
That's a good question. I don't think it is the peak. It may be a respite, and I'll show you, a couple charts, because I do think we bottomed in equities. We have a little short-term bottom, and we'll probably rally 2 to 3 weeks. Timing I'm looking for is the end of June. Maybe you like this one, Dale. Maybe right near the solstice. As a bear market, rally peak right there.
Could be. Okay.
Here's the ES. This is a monthly chart. In May of 2024, if we hit this trend line, we're at ES 3000. I believe that would be the best case scenario. More realistic, because I think, we really have to pay for our sins of excess in the last one, is we come down to this, this dotted line here, which would be around 2,700 ES, or the full square down here around 2,300.
Jeremy Grantham's target 2,500.
Yeah, I think
It's
in
a
that
long-time
neighborhood.
trend line. Yeah.
Yep. In that neighborhood, I think is completely realistic. If we hit the full square, down here at around the 2,300 area, it'd be 52% off the high, which again is not crazy bear market. It's a bear market.
Yeah.
Let's go to the next one.
How about silver? It took out the stops a week or so ago. Like it?
Yep. Here's commodities. I think we got to focus on commodities because they're one of the best performing assets, along with real assets when you're dealing with inflation, which we are. Here's gold. I like gold a lot. I think gold has been frustrating everyone for a full year now, year and a half, maybe almost 2 years actually. And I think it's just a matter of when and not if we're going to see much higher prices in gold. There's silver. You were talking about silver. It's really interesting how we've been chopping around here and, sort of frustrating everybody as well. We held this major geometric support area, which is, in the 21 area. We pushed down a little bit below it, as you said, grab some stops. But notice this, we're above this entire base.
Yeah,
that's
where people want to buy it at 19 and 18. They think
it's really good market structure. So I do think we're going to see much higher prices in silver.
Okay.
I'll talk about a couple other commodities that, again, I think haven't like moonshot. The grains, I love the grains. I've been talking about the grains, but I think the grains have to correct. As we described this sort of moving pattern of corrections and then consolidations and then bull markets, I think we're seeing that in the grains where we're in a correction phase, a consolidation. But coffee's one that looks like it's ready to go. Very, very strong bullish support at the 210 to 212 area. As long as that holds, I'm very bullish on coffee. Sugar as well. Sugar's been basing for almost a full year now, going sideways in between like 20 and a half and 18 and a half. As long as 18 and a half holds, we're just sort of building the launching pad for the next move higher. So I really, really like sugar. I think those four commodities, including crude and natural gas, are the ones that I'm currently focusing on while waiting for the other ones to sort of set up and finish their consolidations and corrections. And that's the presentation. If we do a little video every week, if you're interested in our stuff, if you're interested in the cycles and the geometry stuff we do,
I've watched them.
Yeah, they're good. They're actionable.
They're good.
We try and give people, the setups for the week and what to
stop competing with me, man.
No, who could compete with you?
I do. You are such a great Ed McMahon.
So
no, I am. I set you up for that one. So anyway, yeah, Ben's a great follow. Ben is a good tactician for swings, and if you're not following him, you're missing out.
I appreciate that, Dale. And again, I'm just a messenger. I hope everybody takes what you're hearing and uses it in some way that's helpful for you, because that's the idea.
May you live long and prosper, even during the epic cycle, my friend.
Thank you, Dale. Same to you.
All right. So Ben Maldonado, everybody, at Ben Maldonado. You could join the team in 4 minutes for the morning edge. We watch this again. It was power packed with information that's going to help you guys. And Ben, always appreciate your giving spirit to come out here and share your hard work with everybody.
Thank you, Dale. Glad to do it and enjoy our friendship. Take care, everybody.
Yeah, I do too, buddy. That's back at you, my trading warrior brother.
All right.
My mouth isn't working so good today. Anyway,
maybe it's already started the holiday.
It's my birthday tomorrow, man.
Happy birthday, Dale.
Yeah, thank you, buddy. So, yeah, I did. It started already. Let me have another Bloody Mary. No, everyone have a great day, and we'll wrap the week tomorrow. Adios. And remember, don't just count your barrels of oil or bushels of grain, count your blessings. And, you know, we can all get through this. You never know if you have faith till you need it. Adios.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.